Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The two recent patterns here originate from about 11 weeks ago when I put forward an old technical analysis technique, but one I recall worked well in the grains earlier this decade, back at the start of the Russo-Ukrainian war. It was the doubling, tripling, or even more of bull channels. In this case specifically, the late January to mid-February bull channel, which doubled and tripled up, provided some guidance as prices zigzagged their way higher. This week prices are back within the doubled up bull channel, moving down towards a support only really established last week of the 50% Fibonacci line of the March 2024 to May 25 move at 651 even. Looking a little further down, we have the 50% Fibonacci line of May 24 to May 25 move at 622.25. However, all this action allowed me last week to draw a quite steep dark blue bullish Andrews pitchfork for the recent moves. We're right now moving down towards the dark blue lower time below, which is currently at 646.75. As I said last week, and I quote, "This is a first effort, very recent pitchfork, and I'm quite prepared to finesse this to a shallower bullish shift pitchfork or to retire it altogether." End of quote. Well, something interesting has happened, something I'm usually loath to do, and that is I've drawn at the same time as a steep dark blue bullish Andrews pitchfork, its derivation, a shallower bright red bearish shift pitchfork for the same move. As I said, I'm usually loath to do such a thing, but I find it necessary this time, as I suspect the bullish Andrews pitchfork will possibly soon be breached, though not as yet, and I wish to have its seeming very capable replacement. It's ready on standby. Today the market is testing the bright red middle time, currently at 658.25, testing it from above. I very much suspect the bright red bullish shift pitchfork may take over and soon as the bullish angle of attack, so still bullish but not as aggressive. Finally, I'd like to go back to something I spoke about 12 weeks ago and ever since, and I quote, "Then there's my final point, is something I saw from my longer term monthly charts earlier in January. It is a May/July 23 to date bear channel. The lower bear channel line is below the bottom of my daily chart. The upper bear channel line is closest today to the market. That's currently at 605 even." End of quote. Well, we tested that upper bear channel line since the beginning of March, piercing it, and eventually prices managed to close above it at the end of April and look right now likely to do the same in May. This brought to mind something I'd seen in oilseeds and veg oils, and it was whether to look at the whole January to date action as one leg of a possible bullish halfway hesitation. I think this is a valid case, right now at least, so I'll put forward the following targets topside for such a pattern. Therefore, a primary target would be in the 652 area, level we have already reached, and a secondary hard to reach target X1 up in the 701 area. This looks good as a pattern idea as long as prices can stay above the upper bear channel line, but we do have some interesting resistances in the way, notably the 50% absolute Fibonacci line at 682, which has been tested but which has also held down the market. So please continue to watch this market carefully. By the way, the primary target was already reached, as I've mentioned. Chicago corn. The key pattern here continues to be, once again, as you can easily see, the August 25 to January 26 dark blue bullish shift pitchfork. We're right now in between the dark blue middle time above, currently at 475.5, and the dark blue lower time below, currently at 456.25. We do also have the green short medium moving average nearby at 468 even, which has and is acting as a support, if not a perfect one. Additionally, and to a somewhat lesser extent, Further below we have the mauve medium moving average, currently at 455.5, mixing it with the dark blue lower time, as well as nearby the lower trend line extension, currently at 453.5, of the July 23 to January 24 descending triangle, and the 50% Fibonacci line for the whole of the 2025 move at 454.75. Meanwhile, above the dark blue middle tine and some way above it, which is just above the dark blue upper tine, which is currently at 494.75, is the April 25 high at 497.75. Then the 50% Fibonacci line of the June to August 24 move at 505, with a little higher the combination of the October 2014 low and the 50% Fibonacci line of the June 23 to February 24 move, both at 516.5, followed by a little higher still by the combination of the 2014 high and the 61.8% absolute Fibonacci line at 525. However, whilst I can list all these supports and resistances, the most important single thing is, will the market continue to maintain itself, and also how well it maintains itself within the dark blue bullish shift pitchfork, which is the showrunner for this market. So far it is doing a great job of it. Kansas City wheat. Much of it was seen in the other grain markets. The rise we saw just before Christmas last year had formed a more than reasonable looking December 25 to mid-February 26 original bull channel. That prices broke higher from 11 weeks ago. I applied here as I've done elsewhere, and I quote, an old technical analysis technique, but one I recall worked well in the grains during the start of the Russo-Ukrainian war back earlier this decade, and that is doubling, tripling, or even more of bull channels, end of quote. Well, the tripled upper bull channel line capped the market throughout March, and I even drew a quadrupled up bull channel. However, by then the influence of these had diminished with time and distance, and a new pattern emerged, especially when prices pushed up through, then back down, back up, and finally now hovering around the absolute 50% Fibonacci line at 697. 697.25 actually. These pushes higher indicates the market's further along in its development than, for example, Chicago wheat. This all being said, 3 weeks ago I said, and I quote, much like Chicago wheat and also something I've seen in oilseeds and veg oils yesterday, it brings to mind whether the whole January to day action, and in this case I would look at the whole mid-December 25 to day action, as one leg of a possible bullish halfway hesitation. I think this is a valid case here, right now at least, so I'll put forward the following targets topside for such a pattern. Therefore, primary target will be up in the 686.75 area, a level we have already reached. The secondary harder to reach target X up in the 745.5 area. This looks good as a pattern idea, as long as prices can stay above at least the lower bull channel line of the doubled up bull channel, and ideally above the whole tripled up bull channel itself. End of quote. Earlier last week, prices reached target X, the secondary harder to reach target, and have pulled back down since then, such that we are now threatening the dark blue lower time, currently at 699.75. Prices have breached but has not yet stabilized below this new, sharper and quite acute dark blue mid-April to early May bullish shift pitchfork. This pattern is quite acute for a bullish shift pitchfork, and there is no second option for this pattern. It is this, or it is something else completely. Hence, as I've said last week, and I quote, I'm not in love with this pattern, I'm quite prepared to retire it should it deserve it. So, a lot now depends on the dark blue pitchfork as well as the 50% absolute Fibonacci line. What's overhead? Well, we have a congestion area between 760 to 764.5 containing the May 24 high at 760, and that's the end of the quote. To all this, I'd now like to add the following. I suspect we may have a very short dated, made from over the last 2 weeks or so, ever since the gap up in early May, a possible descending triangle pattern in formation. So far we have not broken out of it, but just in case, as we might run out by the middle of next week, I'd like to lay out some possibilities. Not targets, you understand, just possibilities. Thus, for a break higher over the upper trend line, we would have a primary possibility of a move up of 37.75 cents, the secondary harder possibility of plus 59 cents. Whilst the break below the small gap would have a primary possibility of minus 29.5 cents, and a secondary harder to achieve possibility of minus 59 cents. I'll be very interested to see how this pattern idea now develops. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.